Hey everybody, Dow Jones Dave here again. And this is a stream I'm watching, and that's a pretty good stream. I like to watch it pre-market. It helps me with pre-market zoomies because I go nuts pre-market. And so anyway, but what I'm going to just happens to be open. So anyway, let's take a look at what I'm looking at. Uh-oh. Remember we had this, where was it, on 1 hour? Had this kind of trendy thing going. Well, look at it now. Advanced here, 1, 2. Now we've got a 3. Question is it going to decline? Well, it looks like on the 5-minute it is. We've got 23 minutes till the market opens, and these cycles are running about that long. So hopefully by the time the market opens, this will come down somewhat and maybe break this trend right here. If you look at the longer term context, as you can see, let's just go to the daily. Bonds are on a tear. Another thing, look at the S&P. Now, what's the difference here? We see it goes down, bounce, 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 bounce. No bounce, flat, down. That's really bad, and I'm just getting more and more short by the moment here, to tell you the truth. We'll see if bonds start to come down a little bit before the open. I would really like to see a correction down here. I don't know if it's going to happen. I would say if this was a stock, don't buy it. Wait for it to come down. But it's not a stock. It's bonds. And bonds are a little bit different. I mean, the same technical principles apply. 1, 2. See, it should come down and form number 3. And that would be my opportunity to get out. So we see the MACD pulling over and crossing on the 4-hour. So what I'm trying to figure out is to hold on the open for a little rally or just get out and go short. And the seasonality things got me going. Watching too many other people too. So basically what I'm seeing here is what we just showed you. Right here, we've got a pivot point. So we don't know where it's going to end up. But I know that this is 1, and this is 2, and it's breaking out. On wave 2. Which means it could be accelerating the trend. And this will become wave 1. This will become wave 2, and so on. And based on what I'm seeing here, there's no rollover, there's no backing off. I think we're going to see an accelerated trend, and I think I want to get out, to tell you the truth. And I know I don't have like my house, my car, and boat in there. It's just mad money, but nobody likes to lose money, and everybody likes to make money. So, and you know, I lost $82 yesterday, and that's a substantial amount. So, you know, I'm hurting. I don't want to lose that. I'd rather make a couple hundred, you know. So, I'm not going to show my positions today. It's too embarrassing. They're really, really red. I'm down like 33% on my account in one day from yesterday. So, yeah, I got creamed. But you see, in hindsight, it's easy to see. Oh, we went flat. But here, it wasn't easy to see. We had a nice little rally going. And then it just died later in the afternoon. you know. And I wasn't here. I took a nap. I woke up and everything was all messed up. You know, I went to sleep and I'm all green, and then I woke up after my nap and it was all red. That's one thing. I take a nap every day, and I almost always end up worse off after the nap than before. So, there it is, right on the line. Right on. If it comes down below this line, the market's going to crash. That will be a runaway correction. A runaway correction is this. Do we have just a drawing tool on this thing? Well, anyway, a runaway correction is when you have a channel, and instead of breaking out of the upside, it breaks down to the downside. A runaway correction breaks out in the direction that the channel is going. And it's always really, really big. In other words, when you get a runaway correction and it breaks out of a channel in the same direction the channel is going, you're going to get a really big move. And it's going to be fast and devastating. So, given everything, I just can't see the market making it back up. See, originally here, when I bought, where was it over here? I don't remember exactly where I bought, but it was around here somewhere. It's a 30-minute chart, so it might have been like around here, because I remember we wrote it up and then actually shorted up here and then went long here and then just got my ass kicked. So lost more than I made I lost more here than from here to here than I made from like here to here. Interestingly enough. So this is looking pretty crashy to me, mostly because of this flat thing. You call that a waterfall, and it's fallen over the waterfall. And the big difference in the character of the reaction at the bottom tells me that this is probably going to be really bad. And bonds are my main concern. Is this it, or is it accelerating to make a higher, steeper trend? And my thinking, the MACD on the, what is this, 1 hour, it's crossed up. 4 hour, it's crossed over. Doesn't mean anything. You come down here and then go back up and still be making a steeper trend. 1 hour, MACD's up. How about the 5 minute? 5 minutes looks pretty overextended. 15 minute is, there it is, overextended. 30 minute is, I call that overextended, but you got this. Yeah, look at that, 4.350. It's time to get out of stocks, and I'm serious. And I will be getting out of stocks in 15 minutes. Then most likely going short. This is that a line? What is that? Whatever it was, it just got exceeded. Oh, it's probably just a spike that doesn't show up on the other magnitudes. Yeah, you got to get out. That's my opinion, and I will be following it.